Welcome to a capital hungry breakdown on GBPUSD. So it's been a while since we've done a full breakdown on GBPUSD. So we're just going to start from the higher time frames, from the yearly chart, quarterly chart, monthly chart, and go down looking at some of the market structure, price action, buyers versus sellers strength, alongside some of the current market fundamentals to see potential trade ideas we can take advantage of. So if you remember the last GBPUSD breakdown, when price was sitting at current, like where it is now almost, we were anticipating that upside because this yearly candle had yet to create any sort of top wick. And you can see that top wick now has been created and rejected exactly at these candle body conjunction points, with the yearly and overall structure still being extremely bearish and a lot of Brexit pressure on GBP still being active, as well as COVID is still active, but overall less impact. When I'm just highlighting some structure on GBPUSD, connecting some of these wick points, where you can see on a yearly perspective from this peaked high, we melted down to create a low with sellers impulsive candles. We had this corrective action. From this peaked wick point, we melted down with sellers impulsive candles to create a low, and now we are creating a bit of a minor support, more of a correction phase on the yearly, and coming to test this market structure again around 1.35. So just with everything being said, for long-term GBP USD recovery and upside, and for GBP USD to get bought up from these lows and correct more of this downside move, a simple judgment call would be that we would need buyers above 1.35. Of course, these are hundreds to thousands of pips in ranges, not 100,000, hundreds to thousands of pips in ranges. And we are just looking at the yearly, but we are just doing some macro analysis currently, right? So overall, very bearish structure, connecting some of the wick points, sellers impulsive candles, more corrective buyers action, and we did fail to break above 1.35. Which was this previous candle body conjunction point, as well as testing, coming close to testing that bearish market structure from these peaked high points. Let me just connect on the dot here. Okay, GBP data has been fairly neutral, but the US dollar is gaining some short-term strength ever since September started, and market volatility and fear is slowly increasing as there's more negativity around COVID, and especially around Brexit pressure on GBP specifically. Of course, we have the risk currency versus safe haven, like I already said. So if there is mass market fear, we will go down to revisit these low points. But now that we understand some of the market structure and what buyers and sellers strength is looking at on the yearly, alongside some of the macro fundamentals, I just want to start mapping out key levels using the candle body conjunction points and some of these lower yearly wicks, as we don't have price data to the downside unless we go down the time frames. So I'm just going to start mapping out levels, and then we'll go to the 3-month we'll go to the 3-month time frame and the monthly time frame to see if there's anything contradicting our analysis of potential GU sells, and then we'll go to the intraday time frames to see what we can take advantage of. So we don't have to go up too far, as we will map out more levels using the quarterly and monthly time frame. But currently we can see GBP USD buyers and sellers are stuck between the key level around 1.275 and 1.327. I'm just going to round these off as I go. A lot of these key levels will, of course, be similar to previous key levels we have mapped, as we use the same concepts to map the key levels. They might just be off by a few pips. Okay, so of course, we like to look at the yearly to get a real broad macro perspective, see how the yearly candle is forming and how it's developing. We already did have sellers at least create a new low that we can potentially revisit. We do have sellers, we do have buyers failing to break above 1.327 and 1.3515 previous candle body conjunction points, as well as failing to break above higher time frame bearish structure, and sellers impulsive candles in control, with the potential to revisit those potential low points if we have continued Brexit negativity and market fear come around again for a potential COVID lockdown round 2, if that does happen. If we get mass market optimism and breaks above 1.3515, from a macro perspective, I could see that upside move start to run up the ranges as we'd be breaking structure, validating support, and validating these lows as buyer entry areas for more macro order flow, for more positional order flow. But other than that, sellers seem in control. We failed to break above those key levels. These are some of the key ranges I'm working with on the yearly. The quarterly is validating this even more. So you can see on the quarterly, this quarterly candle, which closes in about 14 days, has yet to create a significant lower wick and has already created a top wick grabbing liquidity in this price sensitivity area. Very similar to like what we saw happen here. Again, sellers in control, corrective action, sellers in control, potential corrective action, and we can come revisit these low points. So the quarterly chart is validating what we've already seen on the yearly, just giving us some more details around it, and we can better highlight the seller's impulsive candles versus the corrective or consolidation phases of buyers. And then we have the continued downside move. Very strong rejection to these previous candle body conjunction points, as well as around the bearish market structure. And we have a lot of price sensitivity in this area that buyers will need to break through and go above to see that long-term upside. Of course, from an intraday perspective, once we have all our key levels mapped out, if we have daily optimism or strong UK data, we can play these buy ranges as price can be in this range for potential period of extended months, right? But we're just going down the time frames and I'm just explaining what I see, and then we'll keep zooming down and narrowing it down. But right now, the quarterly is reflecting what we see on the yearly. I'm just going to continue to map more levels. Very strong resistance around this area here as well. Okay, so now on the monthly time frame, I'm gonna map more key levels, but we just want to look at how buyers, even with the strong market optimism, they failed to really break above this price sensitivity area to the left or even go to revisit previous highs. You can see a very strong order block here that they would need to break above anyways to continue the upside move. This new monthly candle for September has already created a significant top wick, rejecting at these previous sensitivity areas and higher time frame candle body conjunction points, as well as bearish market structure. And sellers have engulfed the previous bullish monthly candle and broke the low of it and have the potential to repeat what we've done when we've come to test these levels again. So let me just zoom out here a little bit. You can see anytime we've come into this area, even with a few monthly bullish candles, sellers take over and we have that impulsive move to the downside. Price here created support. Buyers went back up to generate after generating liquidity from the pullback to test this area again. Failed to break. Sellers jumped in the market. This is when we had that impulsive downside when coronavirus was first hitting the markets. Support created again at the same level because we're in this very higher time frame range. Buyers, very strong buyers candles with as we had such strong market optimism and V-shaped recoveries across indexes, across countries, very strong bullish engulfing candle, very similar to what we saw here. Another strong bullish engulfing candle that looked like it was going to start breaking above that range. But again, no, very strong bearish reaction. Sellers jump back in at this very strong price sensitivity area and bearish market structure point here as well. And we look like we can get a repeat of this type of sell play down, where we want to take advantage of any pullbacks on the new month and continuation down. But from the yearly, from the quarterly, and from the monthly, we are looking like sellers are in control on the higher time frame and on a macro level. We are rejecting breaking above key levels of bearish market structure. Sellers do look a lot stronger, in my opinion, especially with some of the Brexit negative Brexit pressure coming back to the scene and the US dollar picking up some short-term strength as well. We just want to observe the price action accordingly. But from the yearly, quarterly, and monthly, I'm getting the same bias so far. I'm just going to divide up some of these ranges with areas of interest for us to work with. I'm going to go down here on the weekly when needed, but right now we're just going to play with the monthly levels. So just give me a second to do that. Okay, so we understand the sorry, I was just reading some of the messages. So we understand that the higher time frames are looking very bearish. We do have that Brexit pressure coming to the scene, some of that short-term US dollar strength. I just want to observe how the last 2 months have played through these key levels. Some of these ranges are very tight, but they're tight for a reason because there's a lot of price sensitivity in that area. But even some of the tighter ranges are still 30 to 50 pips. But yeah, we'll play with these levels accordingly, and then we'll clean them up as needed if some ranges are just way too tight. So far, we can see very nice reactions to our higher time frame key levels using the candle body conjunction points, even with some of these intraday wicks or the reaction at that yearly bearish market structure. Very solid reaction there as well. Key levels are looking really good to use as guides. Very nice reactions. Yeah, so that's looking very good to me to use as guides. We can clearly see that we are starting to shift into some bearish intraday structure as we're seeing sellers impulsive candles come into control here. We have a very strong rejection at that yearly bearish trend line as well as yearly key level. So I'm just going to say this was the main point. You can see this was a very strong order block and liquidity zone area where we had an impulsive move. And you can see that is also where we impulsively broke and retested before more sell orders entered the market from this order block area to the left, which was before used as a buy entry point, now is being used as a sell entry point. And we're seeing that bearish structure start to develop. So very clean. So of course, this was the market optimism run, very similar to GJ that ran for an extended period of time, ran for like a month or longer, and then price failed to break those higher time frame key levels and higher time frame price sensitivity points. We are also coming back below this order block area where we had that initial upside impulsive impulsive move to retest those higher time frame key level points, and we are developing intraday bearish market structure as you can see here. This isn't like the nicest trend line. I would like better liquidity grab points to retest this level, but even this upside we can see now is looking very corrective compared to the seller's downside move. We did react at the previous high points here. You can see that is where sellers started to close off some of their orders and buyers jumped in accordingly to relieve some of that order flow. But we have a lot of potential for continued downside as the US dollar is looking a lot stronger on the intraday and short-term perspective, and there's a lot of sellers pressure on GBPUSD. So with everything being said right now, I would only see safe buys coming back above this order block area and correcting this downside move and breaking this bearish market structure. So I would only start to look for safe buys on GBPUSD to revisit those highs again above 1.30400. Then we would validate this as a buyer support level, we would fully correct this secondary wave of an impulsive downside move. We would be coming back above this strong order block area and developing some bullish market structure to revisit those highs. If we also notice at the same time the US dollar continues bearish and Brexit negativity gets waved off and there's more Brexit optimism, as well as stronger UK data, which we have later in the week, we just have to watch accordingly. Continue to watch your newsroom headlines, of course, as well as their up to date real time streaming, and the newsroom is back to normal, of course. And continue to also watch the FTSE 100 Health, the UK equity exchange, UK stock market, of course. But that is what I'm seeing. I'm noticing on all time frames that sellers are still in control. We're noticing that shift in market sentiment, that negativity being caused from Brexit. From an intraday perspective, yes, we can update GBP USD like as per our market update webinars and look for scalp trades or trades daily. But from like a longer term intraday to swing perspective, I would be looking for buys up to the high again above 1.304, even above 1.2985 if you want to be a little quicker to potentially retest to potentially retest that higher time frame bearish market structure in those key levels. We're just going to keep this as is, move this up a bit because we're still playing with the potential sell side bias. I'm just going to start labeling the chart a little bit. Okay, we just want to be cautious of the Bank of England stuff on September 17th, Thursday, the meeting minutes. UK CPI figures we will look at, and the UK retail sales at the end of the week. And we also have a lot of US data and FOMC. FOMC is the main thing that's in focus to give the sentiment to give investors sentiment and bias towards the US dollar to see if there is still any signs of economic weakness that can potentially boost the US dollar as a global safe haven, the world's reserve currency, or if they see signs of economic recovery, which will of course rally equities and stocks, but weaken safe haven currencies and give strength to risk currencies. But other than that, you guys already know what's going on. The UK data last night was fairly average. It was just on forecast, nothing too substantial. I will send a little update of when this data is being released as well. But that is what I see on GBP USD on the 4-hour chart now on the intraday perspective, mapping out some trade ideas using first going from the yearly, then the quarterly chart, then the monthly, looking at the market structure, buyers versus seller strength, key levels based on candle body conjunction points, looking at the market structure shift on, of course, on the intraday perspective, what we would need for long-term buys again, or to see GJ or GU upside, what we need for sells either below the previous low points at 1.275 key level or potential at a retest at this bearish TL and or even at 1.298. But overall, this is looking more corrective buyers versus impulsive sellers. And that is the GBP USD breakdown.